Walk down any grocery aisle, and you'll see brands you've known your whole life. Cheerios, Betty Crocker, Pillsbury. Many of these comfort foods come from one powerhouse, General Mills. For over 150 years, General Mills has quietly built a reputation for stability and reliability, making it a rare gem for investors seeking steady, long-term growth. Today, we'll uncover why this consumer staples giant could be a cornerstone for your portfolio, offering both dependable income and peace of mind. Let's pull back the curtain and see why General Mills might be the most overlooked dividend growth opportunity hiding in plain sight. Before we dive in, let's clarify three key investing concepts: value, yield, and growth. These are the pillars that guide smart investors when choosing where to put their money, and understanding them can make all the difference in your investment journey. An undervalued stock is like finding a $500 table for $300, a quality business trading below its true worth. It's about spotting opportunities where the market hasn't fully recognized a company's potential, giving you a chance to buy in at a bargain price. High dividend yield means you're paid generously just for owning the stock, often outpacing savings accounts or the market average. This steady stream of income can provide financial stability and peace of mind, especially during uncertain times. But yield alone isn't enough. The real magic is dividend growth, when a company not only pays dividends but increases them year after year. This signals a commitment to shareholders and shows the company's earnings are growing steadily. This signals a healthy, confident business and creates a compounding effect, growing your income faster than inflation. Over time, reinvested dividends can significantly boost your total returns, helping you build wealth more efficiently. When you find a company that's undervalued, pays a high yield, and consistently grows its dividend, you've found the holy grail for income investors. These rare companies offer both immediate rewards and the promise of future growth. General Mills checks all these boxes, making it a compelling candidate for both immediate income and long-term wealth. Its track record of rewarding shareholders sets it apart from many competitors. Let's see how it stacks up against the competition and why it deserves a closer look in your portfolio. General Mills isn't a trendy newcomer. It's a staple of American life, woven into the fabric of our daily routines for generations. Its roots stretch all the way back to the 1860s, when the Washburn A Mill first began grinding flour on the banks of the Mississippi River, helping to feed a growing nation. Over the decades, General Mills has become a household name, with beloved brands like Cheerios, Lucky Charms, Betty Crocker, and Haagen-Dazs filling breakfast tables, lunchboxes, and snack drawers in homes around the world. This broad and diverse portfolio means General Mills isn't dependent on any single product or fleeting trend, providing the company with stability and resilience through economic ups and downs, recessions, and booms alike. As a classic consumer staples company, it thrives on the everyday essentials people buy no matter what. Food for families, comfort in tough times, and the simple joys of sharing a meal together. That's why its earnings are steady and predictable, making it an ideal choice for investors seeking reliable dividends and long-term financial security. But General Mills isn't stuck in the past. It's a company that continues to evolve, embracing new opportunities and changing consumer tastes. Its bold move into the fast-growing pet food market with Blue Buffalo shows a management team that's ready to adapt, innovate, and grow beyond traditional boundaries. By tapping into the booming pet market, General Mills is future-proofing its business, ensuring it remains relevant for the next generation of families and their furry companions. This unique blend of tradition and innovation is what makes General Mills so attractive for long-term investors, offering both stability and the promise of growth for years to come. Great brands are only half the story. General Mills' financials are just as impressive. In 2024, it reported over $20 billion in sales, generating strong, predictable cash flow year after year. This cash flow is the engine behind its reliable dividends and ability to invest in growth. After acquiring Blue Buffalo, General Mills prioritized paying down debt, strengthening its balance sheet, and reducing risk. Today, its investment-grade credit ratings reflect a disciplined, well-managed company. A healthy balance sheet means more cash for shareholders and less vulnerability to economic shocks. For dividend investors, this financial strength is a key reason to trust General Mills for the long haul. The numbers confirm this is a cash-generating machine built to last. General Mills has paid dividends for 125 years, through wars, recessions, and inflation. That's not just a record, it's a culture of rewarding shareholders. Today, its dividend yield sits around 3.6%, well above the S&P 500 average and most savings accounts. This means instant passive income, whether you're reinvesting or funding your lifestyle. Even better, General Mills has returned to growing its dividend after a brief pause, protecting your income from inflation. Its payout ratio remains conservative, usually around 50–60%, leaving plenty of room for reinvestment and future increases. This balance of yield, growth, and sustainability is rare, and it's why General Mills stands out as a true blue chip for income investors. With a strong dividend history and prudent management, your income is built on a solid foundation. The packaged food industry is fiercely competitive, with giants like Kellanova, Kraft Heinz, and Mondelez all vying for your grocery dollars. These companies dominate store shelves, each with a vast portfolio of household names, making it a constant battle for consumer attention and loyalty. So, what sets General Mills apart from the rest? It's the company's unmatched brand diversity, spanning everything from iconic cereals and baking mixes to hearty soups, creamy yogurts, and now, a strong presence in pet food. This wide range allows General Mills to reach nearly every type of consumer, no matter their tastes or needs. While some rivals struggle with mounting debt or rely on aging, stagnant brands, General Mills is constantly investing in innovation and operational efficiency. This commitment keeps its products fresh and relevant, while also helping to keep costs low and margins healthy. Its Accelerate strategy and relentless cost-saving programs give it a real profitability edge, even when inflation bites into the industry's bottom line. General Mills' ability to adapt quickly to changing market conditions is a key reason for its continued success. The Blue Buffalo acquisition was a true game changer, allowing General Mills to tap into the booming pet food market, a move that most competitors haven't been able to match. This strategic expansion has opened up new revenue streams and positioned the company for future growth. This diversification and forward-thinking approach have transformed General Mills from a slow and steady food producer into a dynamic company with real growth engines. Its willingness to evolve and embrace new trends sets it apart in a crowded marketplace. In a crowded field, General Mills' stability, efficiency, and smart expansion make it a standout choice for investors looking for both reliability and growth potential. It's not just surviving the competition, it's thriving, setting the pace for the entire industry and proving that innovation and adaptability are the keys to long-term success. The 2018 Blue Buffalo acquisition was a masterstroke, launching General Mills into the booming premium pet food market. Pet owners treat their animals like family, fueling demand for high-quality, science-based foods, Blue Buffalo's specialty. Even in tough times, people rarely cut back on pet food, making this revenue stream especially resilient. Blue Buffalo now drives faster growth and higher margins than many of General Mills' legacy brands. Its success helped General Mills pay down debt quickly and return to dividend growth. With ongoing innovation and international expansion, Blue Buffalo is a long-term growth engine, not just a one-time boost. For investors, this means a more dynamic, future-ready General Mills and a stronger case for sustainable dividend growth. So, why consider General Mills now? The answer is simple: value. Despite strong performance, the stock trades at a PE ratio around 14, well below the market average and its own history. The market's short-term worries have created a rare buying opportunity for long-term investors. With a 3.6% yield, General Mills offers more income than most bonds or CDs, plus the potential for dividend growth. Its defensive business model means steady demand, no matter the economy. As uncertainty rises, investors flock to companies selling essentials, and General Mills fits the bill. This is a chance to buy a world-class business at a discount, locking in both income and stability. If you want a portfolio anchor that pays you to wait, General Mills is hard to beat. In summary, General Mills is a rare blend of income, growth, and safety. Its iconic brands, financial strength, and commitment to shareholders make it a compounding machine for patient investors. The stock is undervalued, the dividend is generous and growing, and the company's strategy is built for the next century, not just the next quarter. The Blue Buffalo acquisition proves management is thinking ahead, securing new growth while maintaining stability. For those seeking a defensive anchor with real upside, General Mills is a hidden gem worth serious consideration. Sometimes the best investments are right in your pantry. General Mills, a recipe for lasting wealth, one dividend at a time.